In short, China's in terrible shape. How terrible. Okay, get this. Later tonight, I didn't set the show up like this, but it sure seems like I did. We're going to talk to Align Technology. That's the maker of Invisalign braces. Its stock plummeted $74, 27%. Now, U.S. business is cool, but the real source of weakness? Tougher consumer environment in China. It fell off a cliff. You're going to hear Joe Hogan tell you that China fell off a cliff, and they're not even getting their teeth straightened, for heaven's sake. Another guest, Richard Fain, CEO of Royal Caribbean. He's going to tell us a similar story about the faltering Chinese consumer when it comes to cruise lines. I wonder how long the Chinese can ignore it. Of course, it's not just the trade war that's got me worried. I mean, look, for years, aerospace has been one of the greatest secular growth themes in our manufacturing. But we just heard from Boeing, and if the delay from the 737 MAX problem continues, they may need to stop production. That used to be their number one plane. Boeing's makes up a huge chunk of American manufacturing capacity, or I should say remaining capacity. If they have to halt production, that could shave 0.5% off our gross domestic product. That's a tailwind turning into a headwind, and there's nothing the president or the Fed can do to stop it. Tesla got hammered today, down 13% on weaker sales. The conference call was otherworldly. Given the demand story that Elon Musk traced out and the $5 billion war chest he's sitting on, you would have thought the stock should have been up $36, not down 36. But I have to wonder how much of Musk's confidence comes from potential sales in China. I don't know if you can still count on. All right, Tesla's not a Ford. It's still a car, though. And the Chinese numbers we got from Ford this morning were atrocious. These days, you can't count on the People's Republic to buy anything except perhaps coffee, where Starbucks grew some same-store sales an astounding 6%. Well, that's a good sense of priorities, Chinese. Here's the irony. You know what was the star of the whole day, and I'm including after hours? No. This is like being a favor. I do this as a favor. Like, he's looking at his thing. I ask him questions. He's like, so, David? It's Alphabet, which is soaring in after-hours trading because of a gigantic earnings beat. You know what the greatest part of Alphabet is? They are not in China. For how many years do we have to hear that not being in China hurt them? This time it's a charm. Now, we know there are pockets of strength in the economy. Retail spending, big box spending continues unabated. Although Amazon, after a big run of better-than-expected quarters, took a breather tonight because of a heavy spending cycle that I told you was going to kick in when we did our game plan. And while the most recent mortgage application data shows a decline, low single digits, housing's still pretty good. But the industrial economy is so weak that Jay Powell now has plenty of ammo to justify cutting interest rates. And if the president rolls out new tariffs on Chinese imports and that $300 billion, if oil goes down, then one rate cut will not be enough. Here's the bottom line, people. As I've been saying since this earnings season began, we have two economies in this country. We have the manufacturing economy and the consumer economy. For the moment, they are very out of step with each other, the former doing badly, the latter doing well. This industrial weakness is a serious problem. It will not go away unless the Fed steps on the accelerator and does so soon, if only to offset the weakness being exported here, of course, along with their air pollution from China.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.